Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the micro bearish impulsive scenario where we are looking for a 5-wave impulsive structure to the downside for much lower prices. In this particular scenario, wave 3 is usually the strongest and most impulsive wave in an impulse between wave 1, 3 and 5. So you expect the highest volume and the steepest move like we had over here, for example, or what you see over here. But at the moment, if we look at how price is grinding to the downside, it takes quite a lot of time and you definitely want to see the volume pick up a bit quicker. So you don't want to stay ranging here for such a long time. You really want to see continuation. However, the weekend is coming up and the weekend is famous for its ranges instead of a big continuation to the downside in an impulsive move. So this is something we have to keep in mind. A common target for wave 3 and usually a bit of a minimum target for wave 3, as wave 3 tends to be the extended wave, is the 1.618 taken from the high to the low of 1 to the high of 2, which is sitting at 25.9k, right on top of the support area between 25.7 and 25.9k. If we go to the bullish scenario, we are looking for a 3-wave corrective structure before then continuation back towards the upside to at least take this high over here at 28.6k. In this particular scenario, the most common target for wave C is between the 1 and the 1.236, also taken from the same pivots over here, and the 1.618 for a wave C is a more rare target at 25.9k. Currently, you can see that the target is very nicely respected, and we're basically in between this target zone and the target box over here, which first acted as a bit of support, but now is clearly acting as resistance. We're also currently ranging on top of the point of control of this range over here. The point of control sitting at 26.5k. Now the value area high for a very short moment was a little bit of support, as you can see, but this can now act as resistance as well. So we're just ranging here, and of course the weekend is coming up, so it will be interesting to see what price does just before the weekend, because I usually expect a big move to happen before the weekend hits. So if there is still a big move yet to come, I hope it comes before 10 p.m. Central European time, as then the New York market closes, and after that time usually we just tend to go sideways. Now, if we look at this wave C over here to the downside in a little bit more detail, then we do have the expectation of potentially another move to the downside for wave 5, and then a 1, 2, 3 sideways structure in a 4, and then eventually a wave 5 to the downside. Over here, what you can see is that between the 382 and the 05, we have two resistance areas. The first one is the high of this gap over here. So this was the low of the gap, which we have entered with a couple of candles, but we didn't really close this whole gap yet. So 27k is interesting. And we also have the daily naked point of control at 27.1k. Now for a wave 4, the maximum target is usually the 05. You don't really want to see candles close up here. And the 0.618 is a very uncommon, very rare target for a wave 4 and is usually an invalidation for me, which is sitting at 27.3k. Now in a wave C, what you then want to see is a 3-4 and then another move to the downside on lower volume. As you can see, as price has been moving to the downside, volume has been increasing, which is typical wave 3 behavior. So preferably, price is going to make another low to the downside, but this time making a low on lower volume. An interesting support is over here between 26.2k and 26.3k. Again, if we are looking for a wave 5, I prefer this wave 5 to be in, or at least a strong move to the downside to be in before the weekend hits in about 3 hours when the New York market closes. So let's see what happens, and if we don't get that move to the downside, then in the weekend usually we expect a range, so you can just expect a range most commonly, right, based on probabilities, that is. Now, if we then look at the wave 4, right, for wave C eventually to the downside, then what we see first of all is that price here retraced to the 886. So we moved up, we moved down, bounced on the 886, went back up again. The fact that price over here hit the 886 gives price a higher probability that this is a wave B or a wave X. There's a lower probability that this low is a wave 2 and we are on our way for a bigger wave 3 impulsive structure to the upside. The 886 is a common target BX, rare for 2, so therefore a low, or another low at least, has a higher probability. So taking this low, potentially moving down to the support area, has a higher probability. Now if we look at potentially a target of a three-wave structure, we did now hit the 1-to-1 over here, taken from the low to the high to the low over here on top of the 886. But what you can also see is we actually didn't yet fill the whole gap. We didn't hit the daily naked point of control. So it will be interesting to see if price still has a little bit of juice to go to the upside, or if this is the high hitting the 1-to-1, which is a target nonetheless for a three-wave structure, and we are on our way to the downside. Now, in the more bullish scenario, we want this to be the low, and we already look for a move towards the upside. However, is it possible that this is the low and we go up? Well, there's never 100% or a 0% probabilities, right? I mean, there's no certainties in trading, but what we have to do from an Elliott Wave perspective is look at these scenarios. If this is the low, can we count an impulsive structure? 1, 2, 3, 4, 5. Well, at the moment, there's then overlap between wave 1 and a potential wave 4. It would be quite rare that this is wave 1 and we are still in a very long wave 2 over here, while the low of wave 2 has been made on the 886, which already is a rare target. So yeah, this looks very, very unlikely. If we look at a contracting diagonal, then we have to think about something like this. But this move to the upside over here, this second leg, is longer in price than the first leg to the upside. So this cannot be a wave 1, 2, 3, 4, and 5, because wave 3 is then longer than wave 1, which is not what you want to see. So if we think about a diagonal, then this over here has to be your 1, and then eventually you're looking now for a 2, for then the diagonal to form like this. But it's way too early to tell. In a double 1-2, this being wave 1, 2, and another 1, 2, this second wave 1 is bigger in price and time than the first wave 1, which is not what you want to see as well. Kind of like invalidates a double 1-2. So then we have a potential expanding diagonal, which, well, it looks very, very rangy and not very diagonal at the moment. And an expanding diagonal is very rare. So based on these these structures from an Elliott Wave point of view and what we see locally, the probabilities are higher that we are ranging correctively, that price is still going to take the double bottom at the moment, but we have to wait and see, of course, what happens before the weekend and what the weekend will do. But from a probabilities perspective, it doesn't look very bullish. Now, if we look at the CVD divergences, the bullish CVD divergences over here played out as this high was taken. After taking that high, we did have some very, very low time frame bearish CVD divergences, but these have all played out now. So basically CVD has been neutralized, and we have to wait and see what happens with CVD on the right side of this newest high over here. If we then look at the probabilities of the different scenarios, then on the micro currently, an ABC scenario compared to the more bearish scenario for an impulse down has a higher probability, based on how price is moving to the downside volume-wise and the impulsivity. At the moment, ABC looks good for then a potential bounce towards the upside, taking still the high at 28.6K. And if we zoom in more locally, then the probabilities are higher at the moment that price will still eventually take the double bottom here, mainly also because of that 886 touch, which is rare for a wave 2, but common for a wave B or a wave X, meaning probabilities are higher. This move to the upside is then a wave C or a wave Y, which basically means probabilities are higher. This is a corrective structure and not an impulsive structure, which therefore means probabilities are higher. We then take the low at least once more time. So let's see what happens before the weekend. If we still get the move, the yes, the no, and if not in the weekend, we can expect a range. And of course, tomorrow morning, 7 a.m. Central European time, I'll send you another update, or I'll bring you another update on YouTube. So I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.